Based on the historical data and forecast, Bitcoin has been in a downtrend, with the RSI consistently below 30, indicating oversold conditions. The forecast for the next week suggests a slight rebound, but volatility remains high as indicated by the Bollinger Bands. Given the current oversold status and the potential for a short-term bounce, I recommend a contrarian strategy focusing on short-term gains. We will implement a buy strategy when the RSI reaches an oversold level of 20 or below, aiming to capitalize on a potential price correction. The entry price will be $86,500, with a stop loss set at $84,700, just below the support level, to limit potential losses. The target price will be $88,800, aligning with the forecast high for November 28, 2025. To refine this strategy, we'll incorporate the Bollinger Bands. If the price approaches the lower band while the RSI is oversold, it strengthens the buy signal. Conversely, if the price touches the upper band while the RSI is overbought, we'll avoid buying. This combined approach increases the probability of success. Therefore, the portfolio will be 60% focused on the RSI strategy and 40% on the Bollinger Band strategy. The key is to manage risk by setting a tight stop loss and aiming for a modest profit target, acknowledging the prevailing downtrend. This approach balances potential gains with risk mitigation, suitable for the current market conditions. Based on the historical data and forecast, Ethereum has shown a volatile trend with a recent dip. The RSI consistently indicates oversold conditions, particularly between 26.8 and 30.4, suggesting a potential buying opportunity. The Bollinger Bands show that the price is currently near the lower band, further confirming the oversold status. Considering this, I recommend a long position strategy. The entry price should be $2,810, with a stop loss at $2,770, right at the support level. The initial target price is $2,950, aligning with the forecast for December 3, 2025. To optimize returns, I propose a dynamic approach. If the price reaches $2,950, we should consider moving the stop loss to break even to protect profits. Furthermore, if the RSI starts to approach the overbought level, above 70, we should consider taking partial profits and reducing our exposure. A secondary target price of $3,130 can be set, based on the center of the Bollinger Bands. This combined strategy leverages the oversold conditions, incorporates Bollinger Bands for price confirmation, and uses RSI to manage risk and maximize potential gains, resulting in a high-return investment. Based on the historical data and forecast, XRP has shown a volatile trend with periods of both upward and downward movement. The support price has consistently remained around $1.95, while the resistance has fluctuated between $2.21 and $2.23. The RSI indicator has spent considerable time in the oversold territory, particularly between November 13 and November 26, 2025, indicating a potential for a rebound. The Bollinger Bands have also widened, suggesting increased volatility and potential price swings. Considering these factors, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels for optimal returns. My recommended strategy involves a long position with an entry price of $2.12 on November 27, 2025, triggered by the forecast price and a lower Bollinger Band. The stop loss should be set at $1.95, coinciding with the established support level, to mitigate potential losses. The initial target price is $2.21, aligning with the nearest resistance level. If the price breaks through this resistance, a second target price of $2.28 can be considered, based on the forecast data. This combined strategy leverages the oversold RSI, Bollinger Bands volatility, and key support/resistance levels to maximize potential gains while minimizing risk. Based on the historical data and forecast, BNB shows a downtrend with periods of consolidation. The RSI consistently indicates oversold conditions, fluctuating between 28 and 42, suggesting potential buying opportunities. The Bollinger Bands show the price fluctuating within a range, with the lower band consistently around 850 and the upper band around 1050 to 1170. Considering the support price of $868, I recommend a long entry at $845 on November 27, 2025. Place a stop-loss order at $835 to limit potential losses. A conservative target price would be $878, aligning with the forecast for November 27, 2025. To maximize returns, I suggest a tiered target strategy. The initial target is $878, but if the price breaks above $880, move the stop-loss to $860 and set a second target at $887. This strategy leverages the oversold RSI and the forecast price movement while incorporating the Bollinger Bands to gauge volatility. This approach aims to capture quick profits while protecting against adverse price swings. The portfolio should allocate 60% to this strategy, 20% to a conservative strategy with a lower target and 20% to a high-risk strategy with a higher target. Based on the historical data and forecast, Solana demonstrates a downtrend with periods of consolidation. The RSI consistently remains below 30, indicating an oversold condition, suggesting potential for a bounce. The Bollinger Bands show that the price is currently near the lower band, further reinforcing the oversold status. Considering the support level at $131 and the forecast predicting a slight increase, a long position is warranted. The entry price will be $131. A stop-loss will be set just below the support level at $128 to protect against further downside risk. The initial target price will be $137, aiming to capture a rebound from the oversold condition and a move towards the middle Bollinger Band. To refine the strategy, we will incorporate a trailing stop-loss. Once the price reaches $137, the stop-loss will be adjusted to $134, securing some profit while allowing for further upside potential. If the price continues to rise, the target price will be adjusted to $142. This approach balances risk and reward, capitalizing on the anticipated bounce while mitigating potential losses. This portfolio combines the RSI oversold signal, Bollinger Bands confirmation, and support level to create a robust investment strategy. Based on the historical data and forecast, TRON shows a slight downtrend over the past 2 weeks, but the RSI indicates it's currently in the oversold territory, hovering around 30 to 33. The forecast predicts a slight upward movement, potentially testing the resistance level of $0.277. Given this, I recommend a contrarian strategy focusing on a potential bounce. We will enter a long position at $0.274, coinciding with the support level. To mitigate risk, we'll set a stop-loss just below the support at $0.271. Our initial target price will be the resistance level at $0.277, representing a potential $3 gain. To further refine the strategy, we'll incorporate the Bollinger Bands. The current price is near the lower band, reinforcing the oversold signal. If the price breaks above the center band of $0.287, it could signal a stronger upward momentum. In this case, we'll adjust our target price to $0.279, aligning with the forecast. This combined RSI and Bollinger Bands approach aims to capitalize on the short-term oversold condition while managing risk with a well-defined stop-loss. The portfolio will prioritize this contrarian long position, allocating 60% of available capital, with the remaining 40% reserved for opportunistic trades based on broader market conditions. Based on the historical data and forecast, Dogecoin shows a downtrend with increased volatility. The RSI consistently hovers below 50, indicating a bearish momentum, and recently dipped into oversold territory, below 30, on November 22nd and 23rd. The Bollinger Bands have been widening, suggesting increased price fluctuations. The forecast for the next week predicts continued downward pressure, with prices ranging from $0.144 to $0.150. Considering these factors, I recommend a short position strategy. Enter a short position at $0.152, with a stop-loss placed just above the upper Bollinger Band at $0.186. The initial target price is set at the support level of $0.147. To optimize returns, I propose a dynamic position management approach. If the price reaches the initial target of $0.147, consider moving the stop-loss to the entry price of $0.152, essentially locking in profits. If the price continues to decline, a secondary target can be set at $0.144. This strategy combines the RSI's oversold signal with Bollinger Band's volatility and support level confirmation, aiming for high returns while managing risk through strategic stop-loss placements. The portfolio will be 60% short Dogecoin, 30% in cash, and 10% in stable coins for risk management. Based on the historical data and forecast, Cardano has been in a downtrend, consistently testing and bouncing off the support price of $0.434. The RSI consistently remains below 30, indicating an oversold condition, suggesting potential for a bounce. The forecast for the next week predicts a continued downward trend, though with slight fluctuations. Considering this, I propose a contrarian strategy focusing on anticipating a short-term bounce from the support level. We will enter a long position at $0.405, placing a stop-loss at $0.398 to mitigate potential losses if the downtrend continues. The initial target price will be $0.43, aiming to capture a quick profit from a likely rebound. To refine this strategy, we'll incorporate Bollinger Bands. The price is currently near the lower band, reinforcing the oversold signal. If the price breaks below the lower Bollinger Band of $0.36, it signals a stronger downtrend, and we will exit the position. Conversely, if the price touches the middle Bollinger Band of $0.489, it suggests a potential reversal, and we can adjust the target price to $0.5. This combined approach, integrating RSI, Bollinger Bands, and support levels, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash exhibits volatility within a defined range of $482 to $556. The RSI fluctuates between oversold and overbought levels, indicating potential buying and selling opportunities. The Bollinger Bands show periods of contraction and expansion, suggesting shifts in market volatility. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will initiate a long position at $522, coinciding with the forecast price and a relatively low RSI reading of 48.3. A stop-loss order will be placed at $500, just below the lower Bollinger Band, to mitigate potential losses. The target price is set at $556, the resistance level, aiming to capture a significant upward movement. To refine this strategy, we'll incorporate dynamic adjustments based on RSI and Bollinger Band signals. If the RSI climbs above 80, indicating an overbought condition, we will consider taking profits or tightening the stop-loss. Conversely, if the RSI dips below 20, signaling an oversold condition, we may consider adding to our position or lowering the stop-loss. The center of the Bollinger Bands will act as a dynamic support level, guiding our stop-loss adjustments. This adaptive approach allows for capitalizing on short-term fluctuations while maintaining a focus on the primary target of $556, maximizing returns while minimizing risk. Based on the historical data and forecast, Wrapped Beacon ETH has shown a downtrend from November 13, 2025, to November 26, 2025, with the price fluctuating around $3,000 support and $3,870 resistance. The RSI consistently remained below 50, indicating a bearish sentiment, with values dropping as low as 27.2, signifying oversold conditions. The Bollinger Bands also reflect this trend, with the price consistently below the moving average. Considering this, I recommend a long position strategy when the RSI reaches the oversold level of 20. Specifically, enter a long position at $3,080. Set a stop-loss order at $2,830 to limit potential losses. The initial target price should be $3,430, aiming to capitalize on a potential rebound. To refine this strategy, I will incorporate the Bollinger Bands. If the price touches the lower band of $2,830, which is our stop-loss, it confirms the oversold condition and strengthens the long entry. If the price moves above the moving average and approaches the upper band of $3,950, it signals a potential overbought condition and a possible price reversal. In this scenario, adjust the target price to $3,870, the resistance level. This combined RSI and Bollinger Bands approach should provide a robust and adaptable investment strategy for Wrapped Beacon ETH, balancing risk and reward effectively. Based on the historical data and forecast, Avalanche has shown a downtrend from November 13, 2025, to November 26, 2025, with the RSI consistently below 50, indicating a bearish sentiment. The support price has remained stable at $13.8, while the resistance fluctuates around $15.2. The forecast for the next week suggests continued sideways movement, with prices hovering around $13.7 to $14.6. Considering the RSI values, we are currently in the oversold territory. Therefore, I recommend a long position with an entry price of $13.4. Set a stop loss at $13 to limit potential losses. A reasonable target price would be $14.6, aiming to capitalize on a potential bounce from the support level. To refine this strategy, we'll integrate the Bollinger Bands. The price is currently near the lower band, reinforcing the oversold signal. If the price breaks below the lower band of $12, it suggests further downside potential, and the long position should be exited immediately. Conversely, if the price touches the upper band of $18.7, it signals a potential reversal, and the position should be closed, securing profits. This combined RSI and Bollinger Bands approach offers a balanced strategy, combining momentum indicators with volatility assessment for enhanced risk management and potential returns. Based on the historical data and forecast, Pump.fun is currently in a downtrend, consistently testing the support price of 0.00289. The RSI has been fluctuating between 34 and 42, indicating a weak upward momentum and not reaching the oversold level of 20. The Bollinger Bands show that the price is nearing the lower band, suggesting a potential bounce. The forecast for the next week predicts a slight decrease, but the price remains close to the support level. Therefore, I recommend a contrarian strategy, anticipating a short-term bounce off the support. We will enter a long position at 0.00275, placing a stop loss at 0.00269 to limit potential losses if the downtrend continues. Our target price will be 0.00283, aiming to capture a quick profit from the anticipated bounce. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI approaches 34 or below, it suggests an oversold condition, strengthening the case for a long entry. Simultaneously, if the price touches the lower Bollinger Band, it further confirms the potential for a rebound. Combining these indicators, we'll adjust the entry price to 0.00267 when both conditions are met. The stop loss remains at 0.00269, and the target price is set at 0.00274, reflecting a more conservative profit target given the overall downtrend. This integrated strategy aims to maximize returns while mitigating risk by leveraging multiple technical indicators. Based on the historical data and forecast, Dogwifhat has shown a downtrend with increased volatility. The RSI consistently hovers around the 30 to 40 range, indicating oversold conditions. The Bollinger Bands are widening, suggesting potential for significant price swings. The support price is consistently at $0.378, while the resistance is at $0.493. Considering this, I propose a contrarian strategy focusing on short-term pullbacks. We will initiate a long position when the RSI dips below 30, aiming to capitalize on potential rebounds towards the resistance level. Specifically, I recommend entering a long position at $0.362 on November 27, 2025, when the RSI is oversold. Place a stop-loss order at $0.344 to limit potential losses if the downtrend continues. Set a target price at $0.376, aligning with the recent forecast and the support level. If the price breaks through the resistance level of $0.493, consider adjusting the target price accordingly. This strategy balances the risk of a continued downtrend with the opportunity for short-term gains during potential rebounds. Based on the historical data and forecast, Curve DAO demonstrates a downtrend with recent signs of stabilization. The RSI consistently fluctuates between 33.3 and 48.8, indicating a mixed sentiment but generally leaning towards oversold conditions. The Bollinger Bands show that the price has been approaching the lower band, suggesting potential for a rebound. The forecast for the next week projects a price range between $0.394 and $0.437. Considering these factors, I propose a moderately bullish strategy focusing on capitalizing on potential short-term rebounds while mitigating downside risk. My investment strategy involves a long position with an entry price of $0.408. Given the support price of $0.407, I will set a stop-loss order at $0.405 to limit potential losses if the price breaks down further. The initial target price will be $0.437, aligning with the upper end of the forecast range and a potential resistance level. If the price reaches $0.437, I will consider moving the stop-loss to break even to protect profits and potentially set a secondary target price of $0.45. This strategy combines technical indicators with forecast data to identify a high-probability trading opportunity with defined risk management parameters. Based on the historical data and forecast, Starknet has shown volatility with a recent dip towards the support level of $0.142. The RSI indicates that the asset is currently in a neutral to slightly oversold territory, fluctuating between 45 and 65. The Bollinger Bands suggest that the asset is trading within a defined range, with the recent price action nearing the lower band. Considering the forecast for the next week, which predicts a range between $0.167 and $0.179, I recommend a moderately bullish strategy. We will enter a long position at $0.145, placing a stop-loss order at $0.142 to protect against a potential breakdown at the support level. The initial target price will be $0.175, aligning with the recent resistance level and the upper end of the forecast range. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI crosses above 50 while the price is near the lower Bollinger Band, it suggests a potential upward reversal. In this case, we will adjust the target price to $0.179 based on the forecast. Conversely, if the RSI falls below 30, indicating a strong oversold condition, we will tighten the stop-loss to $0.14 to minimize potential losses. This dynamic approach allows us to adapt to changing market conditions and maximize potential returns while managing risk effectively. The portfolio will be 60% based on the trend and future direction, 20% based on RSI, and 20% based on Bollinger Bands. Based on the historical data and forecast, Virtual's protocol has been in a downtrend, with significant volatility as indicated by the Bollinger Bands. The RSI consistently hovers below 50, suggesting weakening momentum. The forecast for the next week indicates a slight upward trend, but still within a range of uncertainty. Given these factors, I recommend a moderately bullish strategy, anticipating a potential bounce off the support level. We will enter a long position at $0.982, placing a stop-loss order at $0.878, just below the recent low. Our target price will be $1.02, aiming for a modest profit while managing risk. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI reaches below 37.7, which is an oversold level, we will enter a long position at $0.882. The stop-loss will be set at $0.856. If the price touches the bottom of the Bollinger Bands, we will enter a long position at $0.938 with a stop-loss at $0.892. The target price for all three strategies will be $1.02. This layered approach allows us to capitalize on potential rebounds while protecting against further downside risk. Based on the historical data and forecast, SKY demonstrates a downtrend with recent price fluctuations. The RSI consistently remains below 50, indicating a bearish momentum, and has touched oversold levels multiple times, particularly around November 26, 2025, with a reading of 32.2. The forecast for the next week projects continued sideways movement, hovering around $0.0428 to $0.0446. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces. We will initiate a long position when the RSI dips below 35, aiming to capitalize on temporary rebounds. Specifically, enter a long position at $0.042, set a stop-loss at $0.0418, which aligns with the established support level, and target a profit at $0.0435, near the recent resistance. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, indicating potential oversold conditions, and the RSI confirms an oversold level, we will enter a long position. For example, if the price reaches $0.0428 and the RSI is below 35, enter a long position at $0.0428, set a stop loss at $0.0418, and target a profit at $0.0431. This combined RSI and Bollinger Bands approach offers a more robust entry signal, mitigating false breakouts. The portfolio will prioritize this combined strategy, allocating 70% of capital to it, with the remaining 30% reserved for opportunistic trades based solely on RSI signals when the price is near the support level. Based on the historical data and forecast, Pendle shows a slight upward trend with periods of consolidation. The RSI consistently dips below 34, indicating oversold conditions, while the Bollinger Bands show price fluctuations within a defined range. The forecast for the next week suggests continued upward momentum, potentially reaching $2.69. Therefore, a strategy combining RSI and Bollinger Bands is recommended. We will implement a buy strategy when the RSI falls below 30 and the price touches the lower Bollinger Band. The entry price will be $2.32, with a stop loss at $2.2 to mitigate potential downside risk. The initial target price will be $2.51, aligning with the center of the Bollinger Bands. To maximize returns, we will use a trailing stop-loss strategy. Once the price reaches $2.51, we will adjust the stop-loss to $2.4. If the price continues to rise, we will further increase the stop-loss to $2.3, securing profits while allowing for further upside. The final target price will be $2.69, based on the forecast data. This combined strategy leverages both momentum and volatility indicators to identify optimal entry and exit points, aiming for high returns while managing risk effectively. Based on the historical data and forecast, DECRED has shown volatility, with support at $22.5 and resistance around $28.8. The RSI has fluctuated between 43.9 and 60.6, indicating periods of oversold and overbought conditions. The Bollinger Bands have widened, suggesting increased market volatility. Considering the forecast for the next week, starting at $27.7, and the RSI currently below 50, I recommend a long position. Enter at $27.7, with a stop loss at $22.5, just below the support level, to protect against a potential downward reversal. The initial target price is $28.8, the resistance level, offering a quick profit. To refine this strategy, I will incorporate the Bollinger Bands. If the price touches the lower band, it signals a potential buying opportunity. If the price breaks above the upper band, it suggests a potential selling opportunity. For this current long position, if the price reaches $28.8, consider moving the stop loss to the center of the Bollinger Bands, around $27.3, to lock in profits and reduce risk. A secondary target price could be set at $29.3, the center of the Bollinger Bands, if momentum continues. This combined RSI and Bollinger Bands approach aims to maximize returns while minimizing risk. Based on the historical data and forecast, DAO shows a fluctuating trend with recent price consolidation. The RSI consistently remains below 80, indicating that we are not in an overbought condition. However, the price has been hovering near the support level of $63.6, suggesting a potential for a bounce. The Bollinger Bands indicate that the price is currently near the lower band, implying a possible upward movement. Therefore, I propose a moderately bullish strategy. We will enter a long position at $68. The stop loss will be set at $63.6 to protect against a potential downturn. The initial target price will be $74.4, aligning with the forecast and the center of the Bollinger Bands. To maximize potential returns, we will implement a trailing stop-loss strategy. As the price moves up and surpasses $74.4, we will adjust the stop-loss to $68. If the price continues to rise, we will further adjust the stop-loss to a percentage of the highest price achieved, say 5% below the highest price. The final target price will be $78.9, representing a significant gain while managing risk effectively. This portfolio combines RSI, Bollinger Bands, and support/resistance levels to generate high returns.